I did not run for office to be helping out a bunch of fat cat bankers on Wall Street. The people on Wall Street still don't get it. They don't get it.
What a difference 3 years makes. That was President Obama speaking back in 2009 during the depths of the financial crisis. He's not taking his stride in the tone these days, especially not when he's looking to raise money from Wall Street. Let's go to Peter Nicholas in Washington to hear about the latest in terms of how the president is doing in raking in the campaign cash from those fat cat bankers. Peter, good morning. What's the latest data we have out on how the president's doing on the fundraising front?
Well, the truth of it is the president is doing pretty well. He's raised $14 million from the financial services sector. It's probably, he's running a little bit behind his pace of 2008, but he has dozens and dozens of Wall Street executives and financial services executives who are helping raise money for him. And so in some sense, the spine of his fundraising from Wall Street really is intact, which is somewhat surprising given, as you pointed out, some of the harsh rhetoric that is used towards Wall Street, passage of the Dodd-Frank bill. And, but, you know, it just shows you there's a certain kind of mutual interest there that Wall Street and the president have.
Right. Now, we just had a chart up while you were speaking there showing what the Obama campaign has raised and what the Romney campaign has raised. So far, Obama is ahead of Romney, and there we have it again, 14 million versus 9.5 million. As the campaign progresses, though, do you think that Romney will be able to raise more from Wall Street, given his background on the street in private equity?
I think that's absolutely true, yes. Romney is also likely to pick up too because he's now in a joint fundraising project with the Republican National Committee. So the caps on what he can raise have been lifted. So he can now raise up to $75,800, whereas in the Republican primary he could only raise $2,500. So he'll be getting a lot more money from Wall Street. And he also has a super PAC that is raising tens of millions of dollars, and a lot of that money is coming from Wall Street. It's proven to be a magnet from Wall Street. So Romney will probably surpass Obama in terms of Wall Street money. But the conventional thinking had been that Obama was really sort of lagging and suffering as a consequence of Wall Street's disaffection with him. But what we do see is a convergence of interest here, that Wall Street to some degree needs the president needs Wall Street. And in this campaign season, the money is continuing to flow towards Obama.
And I guess there's also a sense, I mean, even though we say Wall Street and the street, I mean, it's not one monolithic voice. And there's still a lot of people on the street who think, hey, you know, we did need some change in the wake of the financial crisis.
That's a very important point. I've spoke to some traders and Wall Street executives, and they say they're not single-issue voters. You know, they see a bigger picture here. Some of them say that Dodd-Frank and stricter financial regulation on Wall Street was really necessary, and it was time for that. They support Obama's broader agenda. They like what he's doing on different issues. So they're not just voting based on what he's saying about carried interest or tax rates. They're looking at a multiplicity of issues.
Granted, I think, as you said, that's an important point. It's not one voice. In your article, though, you did note that, you know, the Obama campaign has seen some high-profile defections or people not out there raising money. You cite Mike Cavanaugh, who was the former CFO of J.P. Morgan Chase. And, of course, Jamie Dimon was a big Obama supporter, big Democratic Party supporter back in '08. This time around, he's really cooled. He describes himself as barely a Democrat. When you lose people like that, how does that hurt your ability to raise money?
Well, there's no question that there have been some defections, and there are people on Wall Street and in the community who are very unhappy with some of the rhetoric that's come from Obama. His comment about fat cat bankers, what he's saying about private equity, his criticisms of Mitt Romney's career at Bain Capital. You know, some people on Wall Street are upset about this and have migrated over towards Mitt Romney. But I think what's interesting, though, is that hundreds of people have dropped out of Obama's pool of what we call bundlers, people who are raising money for him. But hundreds of additional people have signed up. And many of the new people come from the financial services sector. So he's definitely lost some support, but he's also picked up some new support. It's kind of a dynamic, complicated thing. But when you do a deep dive into it, you can see that he's actually probably not as bad off as one might expect at this point in his presidency, given his history with Wall Street.
All right, Peter, fascinating stuff.